Yeah, you guys actually clap for me when I'm not the fine master. Before I get started, a couple thank yous, Dwight, for my Denver Broncos mask.
There you go.
You want to see me with it on, right?
Yeah, so I came to the place last year.
And then to Ron Williams, because I've been about ready to die, not knowing what I was going to do with my son in 2 weeks. Thank you for your announcement yesterday on we're going to be doing distance learning, and hopefully I hear from the principal. This is my son's first year in junior high, so it's like we're in a whole new world. So, but I know I will be hearing from him shortly. So, I want to talk to you a little bit today about how COVID-19 affected the insurance industry. It's affected every single industry in different ways and in unique ways, but it's had kind of a unique impact when it comes to insurance because of a particular type of coverage called business interruption, and I'm going to get into that a little bit later. But what I wanted to talk to you about first was kind of what happened with our office and what we did, and then kind of get into some of the meat of what's gone on in our business. So on, I think it was March 20th, it was a Friday, the governor basically shut the world down, or at least California, but pretty much at that point in time everyone was shutting down. And as an insurance agency, we're considered an essential business, so we didn't technically have to shut down. But what we came to the decision of was to have our staff work from home because we weren't sure what this all meant. And we had the ability to do it. We had the technology in place to get it done. We had all of our computer system is in the cloud. So my staff can log in to their desktop from wherever they're at, home, at the office, or somewhere else. Our phone system is set up in such a way as that if a call comes into the main office or their direct number, it can be forwarded to their cell phone. So we were able to have our staff work at home, and they did that from March 20th until Monday, May 18th, when I brought everyone back into the office, and we've been back open since. Even under the most recent, shutdown, quote unquote, since we're an essential business, we decided this time we weren't going to shut down. We have a lot more knowledge today than we did back in March. We know how things are going to kind of occur, so we made the decision to keep things open. Many of you have probably already enjoyed this. If you haven't, either your insurance company's not doing it or something's amiss, but most of the major auto insurance companies had issued back in late March, early April, basically bulletins saying that they were going to refund approximately 15 to 20% of your premiums. And the reason they were doing that was twofold. Obviously, you weren't driving as much, right? Because everyone was staying at home. So if you're not driving as much, technically you shouldn't be paying the same amount of premium. Because much of your premium, especially in California, not so much other states, but much of your premium in California is determined by the amount you drive. So if you commute up and down the hill to work, or you drive a couple miles to work here in the high desert, your premiums are going to have or be determined based upon that amount of mileage you drive on an annual basis. So if you're driving $20,000 or 20,000 miles a year, you're paying a much higher premium than if you only drive 5,000 miles a year. So some of the companies that did this, Mercury, Safeco, Allstate, but again, there was a lot of them that did this. The other reason that they did it is because their claims are at the lowest they've seen in years. And why? Because you're not driving. You're not getting into accidents. You're not out there, doing the things that you'd normally be doing. And so the likelihood of a fender bender or any other type of comprehensive claim that might occur based upon wind and sand and all that type of stuff that could occur to your vehicle while you'd be out driving on the freeway or otherwise is not happening. So they did it for those two reasons. Number one, you're not driving as much, but number two, they don't have the claims. So we saw a lot of insurance companies give refunds and rebates, and they did that in a couple different ways. If you were paying kind of on a monthly basis, they would provide a credit on your bill, so you would see that. If you had paid on a full 6 months or a full 12 months, then they would actually issue you a check and send that back to you. So obviously, if I'm not your agent, I can't answer the question as to why you didn't get one, but I would encourage you to figure out why if you did not. The other thing that happened is our state Department of Insurance, California Department of Insurance, and the insurance commissioner, Richard Lara, issued a number of executive orders basically aimed at our industry, specifically at insurance companies, but also at insurance agents and brokers. And I wanted to tell you about those. The first one that he issued was on March 18th, and it was extended, I believe, on March 5th or May 15th, and just recently expired on July 14th. But that basically said that insurance companies couldn't cancel you for non-payment. Now, that doesn't mean you didn't owe it, but previously, if you didn't pay your premium, they could cancel your insurance policy. And most insurance companies would, because their systems are set up, it's all automatic. It's just, if you don't pay, cancellation goes out, you have a grace period, you either pay it and get reinstated, or your policy cancels. Well, the insurance commissioner issued an executive order that said to insurance companies, you can't do that, and this is for the period of time. That did expire on July 14th, but that was a pretty big deal. The other couple ones that he did were a requirement to accept, forward, and acknowledge and fairly investigate all business interruption claims. That was done on April 14th, and again, I'm going to get into business interruption and business income as a part of coverage here deeper in a moment. There was also an unfair settlement practices executive order, which basically really focused on insurance companies and or adjusters lowballing a settlement offer on a claim or refusing to settle the claim at all because of COVID-19. And this came out of the fact that the courts were basically closed. There was no ability to get into court to get relief, and so basically this executive order was pushing and forcing the insurance companies and the adjusters to actually settle claims. All right, so this is one that Mike really wanted me to get into a little bit deeper, and that is what is known in our industry as business income and extra expense losses. So the basic definition of that is business income coverage is protection against loss of income or profits when a business has suffered a property loss or damage from a covered peril, such as fire, theft, or vandalism. It covers the time when the business is shut down until the property is repaired or replaced. So my professional interpretation of that basically is, if you have a business and you suffer a fire loss, or someone comes and vandalizes your property or steals your equipment and you can't operate, then you have a business interruption claim. Okay? So that's the basic understanding of what business interruption insurance is and does. But one of the things that this has created is, well, whose interpretation is it, right? So an insurance policy is a contract the insurance company enters into with you, the insured, whether it be you as an individual or you as a business. It is an actual contract. So these things go to, court, and they go to law. And I just want to tell you about some of the cases. I get these daily, folks, so this is only a sampling of them. But I think it was last week, Circus sued AIG in Nevada for $97 million in loss of business. Okay? They had a policy that's referred to as all risk, which technically there's really no such thing anymore. Back when my dad was in the business in the 80s and 90s, they did have things like this. Maybe Don remembers them. But they were, basically there were no exclusions. They covered anything, including earthquake and flood. There's no such thing as that anymore. Earthquake and flood is excluded on all policies, including what they refer to as all-risk policies. But an all-risk policy would basically mean, or supposedly say, that if there was some sort of loss, no matter what the reason is, besides earthquake or flood, it would be covered. In this case, AIG denied their claim and they're suing them. And you all know AIG, they're one of the biggest insurance companies in the world. A women's clothing franchise called Altered State, which I'm not familiar if they're here on the West Coast at all, but they're back east. They're suing Hartford for $28 million in loss of business income. An interesting case out of Michigan, there was a restaurant chain called Gravitas Management Company. They own soup spoons and restaurants called the Bistro in Michigan. The Michigan state judge rejected their claim of $650,000 in loss of business income. It's the first case in the nation where a judge has actually made a decision. So we expect that to set some sort of precedent. But I will tell you, in the United States, I expect this to go all the way to the Supreme Court. And it's going to take years to get there, but there's just too many businesses who've had loss of business income and are suing the insurance companies over this issue. Again, the way the contract reads is you have to have physical property damage to your place of business. And what the insurance companies are arguing, whether it be right or wrong, is that the coronavirus is not physical damage. It's not a fire, it's not theft, it's not vandalism. So that's one of the reasons that you're seeing this back and forth. But I will tell you that I suspect in the coming years, these cases will work their way through the courts. Some of them will ultimately get to the Supreme Court. And I suspect that the Supreme Court's going to have to give an opinion as to whether or not that contract between you as an individual or you as a business and your insurance company requires them to pay up. An interesting note, AXA, which is one of the largest insurance companies in the world as well, in France, the courts found that they had to pay, and they are paying. So, you know, as much as you see things going on here in the United States, it's interesting to watch things internationally because this is going on throughout the world, and in France, they were ordered to pay. There's lots of legislation out there, both at the state and federal level, to try to address this issue going forward, or even try to retroactively fix it after the fact. And the retroactively fixing it after the fact, I think, is going to be somewhat problematic, only because insurance carriers are going to fight it tooth and nail until, again, it gets all the way to the Supreme Court. So if the California state legislature introduces a bill and the governor signs it that requires insurance companies to pay out on business interruption claims because of coronavirus, then I suspect that they'll sue the state of California, and this will ultimately end up at the Supreme Court. At the federal level, you all remember 9/11, right? Well, remember, after 9/11, the federal government created what is known as TRIA, or the Terrorism Risk Insurance Act, and every business policy that any business buys, you have the option to accept or decline that coverage. And there's a backstop at the federal government to help fund that. So if there's some large terrorism loss, the insurance companies have to pay out on it, but the federal government steps in and pays anything above a certain amount. Well, there's a move in the Senate right now to basically introduce legislation that would basically do the exact same thing with respect to a pandemic in the future. It would not address COVID-19, but if we have another one of these in 5 or 6 years, that would come down and would cause businesses to close, loss of business income, that endorsement will be something that as a business you will likely be able to purchase and add on to your policy where you currently cannot. A lot of insurance policies right now, when it comes to business interruption or business income, actually specifically exclude virus or bacterial issues. So even if you want to say, well, maybe it did physically cause some sort of property damage and cause me to have to shut down my business, if there's that exclusion on the policy, it's so specific to the coronavirus that you wouldn't have coverage anyway. But I suspect that the federal government will actually pass some sort of legislation with respect to this so that it'll be something that you can purchase in future years. I also expect that, although there's some fighting going on in Washington right now over this, some relief of liability to businesses that could get sued as a result of someone coming into your business and they get the coronavirus as a result of being in your business. I mean, how do you really prove that? But if someone were to sue you because, you know, they said, oh, I came into your place of business and I contracted COVID-19 because you weren't doing what you should have been doing properly, there should be some limited liability there, if not completely exoneration through federal legislation, which again, as to politics in Washington, D.C., things may change and they may not go that way, but we do expect that there will be some sort of legislation passed to limit the liability that businesses might take on as a result of this. Because, I mean, the facts are, we don't really know when or where we might catch this. We just know it's out there, right? And at this point, it's so prevalent, even up here in the high desert, that you could catch it here, you could catch it, you know, at the grocery store, you could catch it at home, but you don't know where you contracted it at. And if you can actually prove that, you'd make a lot of money. Because if there was a way of being able to do that and determine where you actually caught the virus, that would be worth, like I said, a lot of money. So that's pretty much all I have. I just wanted to share that information with you and open it up for questions. Kevin?